Now we move forward to the fourth technical session of the Congress, which is GST 2.0. The next frontiers, while GST has done well so far to provide a strong foundation for indirect tax reform, there is a need to elevate it to the next level where it can further promote the ease of doing business. For our next session, we'll be joined by 2 anchors and 3 panelists physically on the stage, while there will be a panelist who will be joining us virtually from London from the session. Okay, so we have the stage session. It's time for me to call upon stage the anchors for the session GST 2.0, starting with Mr. M.S. Mani from Deloitte Touché Tohmatsu Limited. Mr. M.S. Mani is a partner at Deloitte. He deals with indirect tax issues across a variety of sectors, such as financial services, infrastructure, technology, manufacturing, and consumer business. Has experience in handling both VAT and GST and customs and global trade matters. Mr. M.S. Mani. Next up, we would like to invite the second anchor of the session, that's Mr. Deepak Garg, Senior VP, RIL. Mr. Deepak Garg is the Senior Executive Vice President at Reliance Industries Limited, former IRS officer, served in Directorate of Revenue Intelligence, CESTAT, TRUE, actively involved in the service tax negative list reform and writing of the education guide. A very warm welcome to you, Mr. Garg. Moving on further, let me quickly introduce you to the panelists of the session, starting with Mr. D.P. Nagendra Kumar, former member GST CBIC. He was involved in the making of the GST prior to its implementation in 2017 and retired as member GST CBIC. Welcome to the panel, sir. We are very glad to have amongst us Ms. Kendra Hann from Deloitte Global Leader, Indirect Tax, who's joining us virtually all the way from London. Thank you so much for your time and joining us live on this session of the TIOL Tax Congress.
Thank you, and thank you for inviting me.
Moving on to introduce the next panelist for the session, that's Mr. V. Lakshmikumaran, Senior Advocate. He's with us today. He's the founder and managing partner of Lakshmikumaran and Sridharan, a highly esteemed law firm specializing in indirect taxes and GST, apart from a wide bouquet of tax areas. A very warm welcome to you, sir. And last panelist on the subject, we have a subject matter expert, Mr. Pratik Jain, is joining us. Thank you so much, Mr. Pratik, for taking time out for being on the panel. A very warm welcome. And with that, I hand over the conducting of this particular panel discussion to the 2 anchors, Mr. M.S. Mani and Mr. Deepak Garg.
Thank you. I'll just take the lead. Welcome, panelists. What a pleasure to have a panel like this with Mr. Lakshmikumaran. It's always a pleasure to sit and argue with him or chat with him. We've done so in the tribunal several times. Mr. D.P. Nagendra Kumar, I had the pleasure of meeting not too many times, but I found his knowledge of GST to be rather deep and incisive. So very good to have Mr. D.P. Nagendra Kumar on the panel. And Pratik, of course, well known, always, again, a lot of industry experience. And also to share with all of you, he's an accomplished stand-up comedian. So this is a quality which I hope he can crack one joke or 2 with us today. And Ms. Kendra Hann, who's there on the screen on both sides. Kendra, we would have wanted you to be here, but a brief interaction that I've had with Kendra Hann in the introductory session, let me tell you, she has tremendous and very wide international experience in different countries. So that is what we'll tap on when we talk to Kendra. A few introductory remarks before I hand over to Mani for his introductory remarks. I had a small speech prepared for introduction, but I think I'll just stick to what I heard today. Particularly, there were two metaphors used in GST, in describing GST, which I'm not sure I quite agree with. And you know, that sets the pace also for a discussion today. The first, and with all due respects to Tax India Online, the first is the title of the book compilation, which was released in the first session, The Buggy Chugs Along, you know, and with a horse-drawn carriage. I don't know for a tax law in today's digital world, if that is the right metaphor for a tax system. Should it be a buggy when even the trains are at 300 kilometers an hour, or should it be something else? That was one. And second, with all due respects to Manish, my friend, you know, very dear old friend, he said we are walking with a candle in hand. So when we go one step further, then we'll know what will happen next. I wonder if we have time to have a candle in hand, or do we need to have a searchlight right at the top of our heads and see 10 years ahead and plan for it today? So therefore, with this thought in mind, where we have to change at the speed of light, where we have to look 10 years ahead, how do we look at this reform of GST today? How do we come to the next level of GST, GST 2.0? We've had a good experience over the last 5 years. We've learned a lot. What are the gaps? What are the shortcomings? What opportunities and challenges, particularly digitization, is throwing? So therefore, how can we best harness them and address the issues? So we have to have a very concerted thought process of, and Mr. Garg gave a very good insight into what tax would be in 2047. And each one of those points are worth their weight in gold. We have to factor all those in designing our tax systems. So we look upon all the panelists to find a direction. And my attempt would be to make it quick, short. I've already requested the participants that if we can have very quick, short answers so that we can cover more space and come out with at least 10 points at the end of it, what the future tax GST 2.0 should look. Mani, your introductory remarks.
Thank you, Deepak ji. So I think it goes without saying that GST has been the most transformational tax change all of us have seen in our lifetime. In my 20-25 years of doing tax, I have not seen anything as transformational as this. So there would be some of us who would say that, look, since it has been so transformational for the last 5 years, let's take a pause. Let the existing systems and processes settle down. Let people understand and keep doing more of what they are doing. Now this applies also because of the nature of the country that we are, with a large number of SMEs, multiple states having different business practices as well. Is there a need for a pause? And this I keep hearing very, very often. But the point that we have to keep in mind is every time we think of taking a pause in the reform process, it's very difficult to restart that reform process once over again if there is a pause. And therefore, in some ways, going to the next phase of GST reform, I would not typically in my mind want to call it a 2.0, 3.0, 9.0 because those are, there. Whether it's GST 2.0 or whether it is GST 4.0, we really don't know. But the next stage of reform in the GST process to a very large extent, I would say, is inevitable. It's not something that is going to happen if we want it to happen. Whether we would like it to happen or not like it to happen, it's going to happen. E-invoicing is going to get widespread. At some point of time, it's going to have B2C also coming into e-invoicing. Information systems within the GSTN are going to improve further and further. And possibly at some point of time in future, we will not have audits of the kind that they happen now. Even the investigating agencies in GST may change the way in which they do their work. So all this is inevitable. There are also various things that have been spoken of in the past repeatedly. When are we likely to have petroleum products in GST? Can we have stamp duty subsumed into GST? These have been discussed multiple period of time, and we'll of course get a perspective on them today from the panelists as well. But to my mind, the question is not necessarily what we do in the 5 years. The question is, can we dream big enough to make the GST system in India truly world-class? Because if we can be a country where today the fintech systems that we have in India are truly world-class, the manner in which the fintech systems work in India are far better than many other countries that I keep visiting. So if we are able to achieve world-class in fintech, can we do world-class in GST? And to get into that world class, what is it that we need to do? What are the steps that we can take? That is the way I would look at GST when we are discussing GST 5 years. Because what GST alone has done in 5 years, the other indirect taxes could not end up doing even in 40 to 60 years. So keeping that in mind, my take would be that over today's discussion, if each of the panelists can focus upon what are we going to do to make GST truly world class. In one of the earlier sessions, I heard one of the speakers saying that we would want other countries to emulate India's GST system. Now, I don't think that's a very far-fetched suggestion because GST, the manner in which it has been working, especially in the last 2.5 years, after many of the initial glitches got resolved, has been wonderful. So if more of these issues get ironed out, if we truly make it world-class, there would be many other countries which would say that if a country of India's complexity and size can have a GST law which is entirely automated and where the entire data flows seamlessly from the buyer to the seller, then why can't that be replicated at some point of time outside the country as well? So keeping this in mind, what I would request is for the panelists to focus more on how can we make India's GST world class and not necessarily the normal topics that we keep discussing on GST.
Absolutely right, Mani. You know, we have to go to the next level. Not incremental, so panelists, not incremental, but something fundamental.
Let's dream big.
Let's dream big, correct. So, Nagendra Kumar sir, first question to you. You know, we gloat in the fact that revenues are 1.5 lakh crore annually, 16 lakh crore, you know, so, which is very good. The measure of a tax is the C efficiency or a VAT return ratio. And in India, it's still as 50%. That is, the total GDP side multiplied by, say, a percentage, 13% comes to what? It's only 50% of the potential revenue that we are realizing. It's because of 3 E's: evasion, it could be exemptions or exclusions. So what are your views? How do we increase this coverage of GST so that, you know, New Zealand has a VRR of almost 0.96%, 0.96. So how do we increase this in India?
Thank you, Deepak. If you look at the revenue collections in the last 5 years, I think from an average of around about 82,000 crores in 17-18, we are now looking at a possibility of perhaps 1.45 lakh crore plus in the year 20 to 23 over a period of 5 years. This growth in revenue has come on account of a couple of important factors. One, I think stabilizing the tax regime, as Mr. Mani has said. Two, the compliance activities undertaken by the tax administration, which has also brought in a sort of a nudge in ensuring timely filing of returns. And also look at basically some sort of a stability, again, the co-anchor mentioned about not tweaking the rates or the processes too often, providing some sort of a continuity for the taxpayers to stabilize their business processes. Mind you, in this last 5 years journey, the tax rates have not been tweaked upwards. If you look at the reduction in rate of taxes, notwithstanding the fact that when we started the GST journey, the revenue neutral rate was estimated to be around about 15.5%. Today we are looking at the RBI estimation is about 11.6. Albeit all that corrections in inversions and also the exemptions getting pruned, the situation is still far better in terms of the net tax incidence benefiting the consumers. Going forward, I would say, I think if collection efficiency will have to improve, 2 factors we have to keep it in mind. 1, the tax base. 2, the collection efficiency process, which partly covered what you said about the 3 E's in terms of rationalizing the exemptions, removing the exclusions, and also addressing the evasion. Technology is fortunately helping us in addressing the third issue. Insofar as the pruning of exemptions, the GST Council has been consistently working on that by formulating the GOM and also addressing the exemptions, but we have a long way to go. On exclusions, I leave it to my co-panelists who will be addressing this question on that. As to the exclusion areas, when do we bring it in the GST net and what should be the timelines. But I must say, I think given the fact, the huge apprehension which the states had before introduction of GST with regard to the loss of revenue, the debate of the producing versus consuming states, I think the 5 years journey in terms of robust revenue collections has largely addressed those concerns. And I hope in the years to come, with more robust revenue, I think the collection efficiency will definitely improve. And I foresee that given the tax GDP ratio, which remained more or less static in our country, which never exceeded more than 15%. When we compare this with some of the developed economies, which are much smaller in size, where the tax GDP could be as high as 45, I don't foresee such a dramatic improvement in the tax GDP, but certainly the collection efficiency is bound to improve with the better compliance arising out of voluntary compliance and also the compliance activities of the department. Thank you.
Thank you very much. Kendra, if you can hear us, I would just like to ask your views. We have a good Indian GST system, as you are aware, since you have also been involved. How does one go about making it great? What has been your experience in the other parts of the world, especially in the UK and Europe? How does one go about making a good GST system into a great GST system?
Well, it's an interesting question, Barney. Thank you for that. I think it also depends on whether you're looking at it from a taxpayer perspective and also from the revenue authorities' perspective. There's clearly a drive from revenue authorities to maximise the tax take. We're seeing a lot of countries struggling for revenue, so they're trying to make sure that they tax more things and they tax them quickly and easily to get the revenue into their exchequers. But I think from a taxpayer perspective, majority of taxpayers obviously want to comply. They want to pay over their VAT and indirect taxes at the right time. So having that sort of certainty, which I know has already been referenced, the certainty of what the taxing system is going to be, what the rates are likely to be, and trying to keep it as simple as possible with some certainty, I think really does help that, because what you want to ensure is that you get the maximum tax revenue for the authorities in the simplest way possible for taxpayers to actually pay it over and collect it and comply.
Yeah. Thank you, Kendra. Very well made point. Keep the tax simple, rate simple, law simple. So expanding the base, Lakshmikumaran sir, when is the time for the excluded sectors, energy, electricity, etc., to be brought into GST? Is the time come? Or do you think the fiscal demands of the state still warrant that it should be there for, exclusion should be there for some more time?
As far as the exclusions are concerned, today I think you correctly pointed out the real estate, electricity and petroleum products are outside the GST as of now. In the real estate, it is posing a very different problem than what we are thinking. If you are thinking about the new real estate transactions are concerned, especially with regard to the multi-story complexes, yes, it is possible. But what about the transactions of the old land, buildings, which have been done long time back? People are selling, and there is already a value, there are capital gain tax and the stamp duties. Whether we should charge GST on that type of transaction is a bigger question. And it will affect everybody on it will also include agricultural land also. The government will go very slowly. Yes, it is possible to have the construction complexes for the new transaction. Those things can be taxed, and that can be given as a credit. That's one thing. As far as the petroleum products are concerned, when you say that about 50% of the thing is coming, GDP is coming, the GST remaining has not come. But if you take into account petroleum product, it will cover about more than 70–80%. And if you want to cover the petroleum products into the GST, the rate for the GST could be more than 100%, because the taxes are like that. And both the center and the states are collecting the taxes, and that's a big revenue for them. At what point of time they will be able to give up and then integrate into the GST is a bigger question. But simpler thing to do, if you want the baby steps, I think natural gas could be immediately brought in, and rather than the entire thing in, we'll gain the experience and we go on this. Electricity is another challenge. We are still talking about giving subsidies for the generation, etc., because of the type of material used for production of electricity. We already have a problem in fertilizer, where on one hand the government of India is giving a subsidy, and on the other hand we are talking the 5% tax on that. That industry is not fully happy with the systems. And if we are going to have electricity coming in, it affecting a whole lot of people. Fertilizer affect very small section of people. So electricity will apply the whole lot. And as of now, the fixing of the tariff for the electricity itself very complicated. We have a separate
Regulatory authority.
The tribunal to fix those things, etc. So I think the government will be very cautious in approaching this. While we say that yes, we need to have a modern system, there are certain issues which the government cannot just overlook. And also you must realize these elected governments in the center and the states, they sat together, thrashed out their differences, came to an agreed point, and then implemented this system. What we got GST is a great thing, which I never thought in my lifetime will happen. It has happened, it's celebration. Now pushing them further, as far as these things, these exclusion to be included, you must also understand there are political parties, they have to face the electorate. So there are other reasons. While we could discuss here about the great system, they must also realize that they have to depend on the electorate. Be careful about that. Thank you.
Mani. Correct.
Yeah, Kendra, one related question to what I mentioned earlier is, in your experience of the VAT systems in UK and the rest of the EU, typically how many years did it take for the reform to get stabilized? And what kind of steps did the government need to take in order to win the taxpayer confidence in the reform? If you can just share your experiences, it can be anecdotal as well. I think that will be interesting to all of us in India.
Well, I'm slightly laughing, Mani, because I don't know how much you've seen of the UK recent debacle on taxes, and really showed how destabilising decisions can be if they're made sort of quickly and unexpectedly. So I think that all countries are still learning about how to manage that sort of balance between tax take and giving businesses certainty and surety over what they're doing. The main, I think, challenge that people are struggling with at the moment is this whole hole that people have got in the financial exchequers as a result of the post-pandemic and obviously the political climate in the east of Europe at the moment. So that is definitely causing the tax takes needed to be increased to sort of fulfil some of those losses. But what governments, I think, are generally trying to do within Europe is to try and do that sympathetically, with a mind on the fact that there's a lot of people facing cost of living crisis, so you can't tax them too much. Where we are seeing a sort of much more reform is really in that whole piece around environmental taxes, which seem to be good taxes for two reasons. One, they are raising revenue, but in a way that is encouraging the population to use less energy-intensive products. Because interestingly, in most of Europe, certainly, energy is taxed. So electricity, gas, and petrol all have VAT on them, as well as excise taxes. And the idea of those is that, well, you know, VAT is a tax on consumption. If you're consuming those goods, you should pay the VAT. But if we are taxing them, you've got a choice about where you spend your money, and if you then don't want to pay the tax, you don't buy the goods or consume the services. So therefore, that's the element of there. And what we're seeing with sort of electricity and gas in particular, they've had low rates. They usually have a reduced rate for consumers and a standard rate for commercial users. But overlaying those now, there's more environmental taxes, so climate change levies, gas taxes, additional excise taxes being imposed over and above those to try and stop people using that. And what we're seeing the biggest reform on that at the moment is on electricity. So in the UK, for example, I as a householder pay electricity at 5% on the electricity I use in my home. But with all the propensity for electric vehicles, I'm going to be charging my electric car from my home electricity point. But if I was buying petrol to fuel my car, I'd be paying VAT at the standard rate. So should there be a difference in electricity used for propelling vehicles versus electricity that's used to heat and light homes? And that's a bit of a debate that's going on. So I don't think reform ever stops, but it's trying to sort of find that balance, I think, between what is socially right, what is right for the tax authorities to have that tax take, as well as to keep that political life stable.
Very, very interesting.
Very interesting. And you made a very valid point, and which is in fact takes me to my next question to Pratik, that you have energy sector in UK which is taxed to both VAT as well as to excise. Terming excise as a tax more like a climate tax, and VAT because it's also a tax on consumption. So this is one distinction which probably we have forgotten, Pratik, in India, that there can only be one single tax. Why not have a dual levy? When we talk about, when Mr. Lakshmikumaran said that it's politically sensitive, and Kendra also said it could be a debacle for political parties, if they just treat too much. Why can't we have a dual tax? Have a VAT, because it's a consumption, and also have an excise duty, so that, the credits pass on.
We have a tobacco, as saying.
I like tobacco. Correctly, like tobacco. Dual levy. Classic example of, constitutionally there is no bar on this. So why not have this?
I personally think that we have kind of moved on from that debate. I don't think that's going to happen. The way I see it happening and most logical way is that I think passenger fuel will take some time. God knows, maybe 5-7 years more. Petrol, diesel to come under GST. Natural gas is a first step. I think there's a lot of debate which has already happened in the GST Council on this. The second sort of product is ATF. Under service tax regime, ATF was sort of partly covered because excise duty paid on ATF was allowed to be offset against service tax on, at least on the commercial flights. That's not there anymore. So you're right. I mean, a parallel levy can happen, but I don't think there's anything serious discussion which has happened on that. I think we'll have to live with, perhaps have a single levy.
Which you're talking today, no discussion.
Yeah.
So, we have to talk, should it happen?
Sure, I mean, of course, I mean, there are pros and cons to both. I think you have to give it to some flexibility to the states to have their own sort of VAT, at least on liquor and petroleum products. Of course, that can be done. And in tobacco, there has already been done, and there was some resistance to start with on that. But I think the most likely event and desirable event is to have a natural gas and ATF to start with, and then continue that debate for the passenger fuels to come in.
And electricity? Do you think there is a cost stranding happening?
Yes,
a lot of cost stranding in electricity.
There is, and particularly on the renewable side, right? You're getting a lot of push to renewable. Government was making this 75 years sort of vision document on tax, and I saw somewhere ESG as a very integral part of that, right? So there is no reason why electricity should not be, and perhaps the revenue implication will not be that much for. The refund, of course, will be there, but you can always stagger it over a period of time. That should happen. Just one additional point I'd like to make. While real estate is out, but what you've done is that you have reversed the policy for real estate and restaurant sector, where you have stopped the input credit. And I think for the up to the construction stage at least, it was available. And I think that was going back to where we started from, right? So I think some of those things, even in the GST, I think we have distorted that a bit. And it makes sense for us to get these two sectors back.
Backwards, yeah.
Yes.
So, Mr. Lakshmikumaran would just like to hear your thoughts that if we have to make GST world class, what is it that you would like to see from a legal framework standpoint or from a legislation standpoint? Are there things that we should be focused upon from now? Because changing any legislation obviously takes a lot of time. And there is also a political process involved in that. But purely from a legal framework or legislation perspective, are there things that you would like to see to make GST in India truly world class?
I think we can divide this discussion into two parts. One is about the rates, whether we should have multiple rates or not, whether we could live with less number of rates. That is one debate. The other one is the procedure, what we are following, whether we can simplify it further or not. As far as the rates are concerned, people normally think under the GST regime there are 5 rates or 6 rates. According to me, it is more than 15 rates already. And these rates have been made under some compulsions. I don't think you can charge even 5% tax on diamonds. Just not possible. 0.25% itself is the major thing. So therefore, there are certain commodities and services which can be taxed at an appropriate level. And you can't have, I will have 2 rates and 1 rate, etc. At least in a country like India, it's not work. There is no point in thinking that in New Zealand it is like this, in Australia like this, therefore you must all. No, I don't think, because if 30% of the population is below sustainable level, to accept the same rate of tax for the haves and have-nots, no, this country cannot happen. So therefore, the debate on the number of rates to be reduced, maybe we can tinker this way or that way, but I don't think that is going to see us through in the long term. But on this procedural side, the lot more can be done. Lot more can be done. In the earlier discussion, we were discussing about the AI and the tools and then GST and coming and doing things, etc. What I heard from the GST and the CEO was that the legislation mandates and the technology GST should implement it. I think in any democracy, it is the right way of doing it. It cannot be other way. Technology cannot dictate the law. I don't think in this country it can happen when we are wedded to the judicial systems we have. But there are several ways in which we can improve the procedural things. One can list out 1, 2, 3, 4, 10, etc. I think I got 11 minutes only, therefore you have to close now. But more important thing, sir, apart from all, one thing which can change drastically about the implementation of our GST law is the change in the attitude of the tax officers. Sir, I am not able to think. When we got the Central Excise Act of 1944, when we got independence, it was a law made by the British against India, ruler versus ruled. And we became welfare state from a police state from 1947. We continued those old laws. Income to 1982 to 22, custom 1898, we continued. And the tax administrators, they found that those rules are better to manage and get the tax. Do you know what was the limitation time for recovery of short levy, non-levy in the 1944 rules? Rule 10 as it stood, 3 months. Why? Everybody knows the minute you are going to collect tax as a short levy, non-levy from a taxpayer, especially on indirect taxes, for a period more than 3 months or 6 months or 1 year, it no longer becomes indirect tax, it becomes a direct tax. It backwards from it. And more so in our country, we have, if you are paying the tax, the differential taxes, because of the fraud, collusion, etc., the customer cannot take the credit. It means you have to pay from your pocket along with your interest and also the penalty. And now what is the time limit? Normal period is 3 years from the date of the final is the annual return, which is up to 5 years. I can say there are many number of small and medium companies in India, both in the manufacturing, industrial, in the service sector. They are paying the taxes, they are genuine, they are taking the help of local consultants, etc. There can be genuine mistakes. But if they are asked, suppose a company with 100 crore turnover, if they are asked to pay a difference between 5 to 12%, a 7% and 7 crores for 5 years, 70 crores plus penalty equal to 70 crores, plus interest, etc., do you think that company can survive? So this is the problem. We are having a system where we are converting in that indirect taxes into a direct tax system with penalties, etc. And this cannot sustain. If you want to have modern systems, you have to moderate it. And apart from all these changes which you are talking about, it's all procedural, nothing substantial. Be humane, be considerate, trust the people. There are people who are outside the law, evaders, as Deepak has mentioned about those 3 E's, deal with them separately. But do not treat everybody at the same level and then be the reason for closing these industries forever. I think that's what I would say. That
Wonderful.
I think is the only thing we can say.
Completely understand. So you are saying
Absolutely.
don't focus too much on, rate rationalization and stuff like that. Focus more on making the procedure simple and implementing the procedures
And
correctly.
getting the right attitude from
Yeah,
the
yeah.
tax authorities.
Yeah, so
Absolutely.
just one thought which I wanted to share with Mr. Nagendra Kumar, and would be nice to hear your thoughts also on that. We have had various systems for example, in customs, we have this concept of AEO, where there is a large onus placed on the taxpayer to fulfill certain norms, in lieu of which the taxpayer is free from multiple audits and multiple inquiries, etc. Can something like that be done in GST to make it world class over the next few years or so?
Yeah, I think segmenting the taxpayer for bringing administrative ease as well as the compliance ease has been well tried and tested across the world over. We did also had an experiment called large taxpayer unit way back in 2006. The focus was more on service delivery, consequent to which a compliance would automatically happen. In the GST regime, I understand that a few of the states have created, based on the large dealer unit, a large taxpayer unit in some jurisdiction. Of course, going forward, we should really look at how do we look at the large businesses. One of the distinguishing factor which is in HMRC, which is there in the large business segment, in terms of whether it is compliance verifications in the form of tax audits or for that matter scrutiny, I think the engagement is at a much higher level and at a much more professional level. We need to look at this. The AEO in customs with a status based on the past compliance track record, and also looking forward with regard to a collaborative process in which I think the compliance in terms of the planned work like audit and scrutiny could take place. Now, we need to seriously deliberate upon this, and I would strongly feel, I think, segmenting the taxpayer and treating them differently in terms of both service delivery and compliance is the way forward. Compliance rating was one such provision which we had envisioned when we drafted the GST law. The compliance rating would have helped the tax administration as well as the taxpayers to be aware of where do they stand in terms of the supply chain. But for some reasons, I think the government didn't want to be projecting the compliance rating, which would have otherwise had a commercial implication in place. But I certainly agree that segmenting the taxpayer and administering them through certain privileges and certain immunities would go a long way in building the taxpayer confidence.
Fantastic. Thank you so much. Yes, sir. Your thoughts.
I know you have not asked any question to me, just interjecting.
No, but your thoughts are always welcome. Please go ahead.
I don't know about that, but you are so kind. When it comes to the question of customs, when an importer gets a tag at AO, he gets the privilege of getting the goods cleared faster from the customs, and thereby the clearance time is reduced, therefore supply chain becomes better and all. As far as the GST is concerned, there is nothing like a officer stopping there unless you make the payment, you clear. So it is in any case automatic, everybody. So giving an extra tag as a good conduct is a good conduct certificate rather than giving him any privileges, unlike in the case of customs. So therefore, you only want a good conduct certificate, yes, you can go and do it.
Not just a certificate. There will be some meaningful, benefits coming out of that certificate.
Such as fewer audits.
Fewer audits.
Such as fewer audits or no audits.
On the contrary, if there is a choice, I mean, lawyers are not paying the taxes.
Lawyers for it be a
Therefore, if suppose later on the lawyers are given the choice of paying the tax forward charges, and I would be one of the large taxpayer, and if a scheme like this is available, I would not opt for it.
do not vote.
The reason is, the penalty for not following this is going to be much higher in respect of this, because I am trusting you, they are business. So therefore, I think
You're happy that
I'm happy that what I am.
Yeah, no wonder it comes from a lawyer.
No, because I don't have any extra advantage of
And you don't have
getting
extra
it.
cost.
And
It should be
good
done
conduct
in-house.
certificate, Nick, I don't want from the department.
Pratik, tell me, what is the way, what is, in your view, extreme simplification? Let's not talk about incremental simplification, extreme simplification of law. Can invoice-based, matching sustain, number one? Can invoices be made the basis of all assessment, which I've posed a question in the earlier session also, of all compliances?
Look,
Quick view,
right,
because
quick
we're running
view.
out of time. But
No, I
quick
know,
view,
I know.
yeah.
30 seconds.
No,
So look, 2-3 broad points I'll make. One is, most of the litigation dispute which is happening today is on input tax credit. You can simplify that significantly, right? There's no reason for us to restrict input credit on commercial construction and so on. Also, I mean, if you feel that employee-related expense should not be allowed as a credit, by all means give an option to industry to say, claim 98% credit. 2% is deemed to be inadmissible if you want that, right? So you can simplify that input credit provision, 50% of your disputes perhaps will be settled. Second is try and get centralization to the extent possible. I don't think that large taxpayer unit will happen and all of that. I think, look, the way the structure is, there is it's a federal structure, states will not lose the right to audit and assess. Extremely unlikely to happen. There was a lot of demand on that as well. But there is some bit of centralization that you can do still. For example, you can have a central GST pool across the states and you can offset, right? Why should we have a separate CGST pool for different states? So that is something which can be done. The last is, and other than the decriminalization of law, which is already hopefully something is happening on that. The last is that you can do sectoral committees, let's say for telecom, for real estate and so on, and try and have those committees interact with the industry on a regular basis and come up with the standardized audit guidelines for each one of them. That's the most centralization I think you can achieve. I don't think you will have some set of officers doing centralized audit sitting somewhere. Extremely unlikely to happen.
Centralized.
So while we have just 2 minutes, Kendra just wanted to hear your thoughts on what we have been discussing, which is that in respect of audits and investigations that happen, is there an adversarial relationship that you have witnessed in the UK and in the EU and other parts of the world? Because in India, we see the relationship between the taxpayer and the tax authorities, especially when it comes to audits and investigations, tends to become very, very adversarial, also tends to become very, very controversial. So what has been the experience in other parts of the world?
It's very mixed, Marnie, really mixed. So the UK, I'd say, is different. It's very much, there's supposed to be more of a collaboration between the taxpayer and the tax authorities. And it was interesting listening to your penalty discussion, because in the UK, each large business is given a behavioural rating, so a risk rating as to whether they are doing what they should be, are they in control of their processes, are they being a good taxpayer, in which case they get a low risk rating. And if they're very complicated or have had a poor compliance history, they get a high risk rating. And why that's important is if they make a mistake, the penalty is, there's an automatic penalty per the law, but the tax authority's got the ability to mitigate that downwards, and your behavioural or behaviour influences that. So a lot of low-risk taxpayers will never actually pay a penalty for mistakes that they make. Elsewhere, it's very different. So I would say probably the most adversarial tax authorities that I come across are like Brazil. Brazil is very much dispute-minded. It's got a very automated system as well, actually. They've really got a lot of technology advances, so there's a lot of real-time reporting. You have to provide your data within a very short time scale, and if you don't, then there's an automatic fine equivalent to the value of a percentage of the input tax credit, effectively. So very, very challenging, and they have multiple rates, so quite similar, I think, in some ways to those rate challenges. But there's loads of disputes there, and what I would say as well is that the litigation isn't resolved quickly. So the disputes go on for 10 to 15 years, such that by the time you come to actually argue in court, you've forgotten what you were arguing about. because everything has, or people have moved on and the law's now changed and things like that. So it is very mixed. Personally, I mean, obviously I'm based in the UK, and I think having that more of an approachable, you know, if you've got a question, you know, is this subject to GST or not? It's quite nice to have an ability to actually ask the tax authority that and know that it's not going to be taken against you or in a sort of negative way, that they'll land at your door with an audit team the following day to see what you've been doing in the past. So I think having that openness and transparency has certainly helped and encourages taxpayers to, you know, to move to the UK to actually set up, because they've got that certainty about how they'll be treated by the tax authorities.
Very good. Thank you very much. That's very interesting. And I really wish we would also have tax authorities and taxpayers in more collaborative behavior. And there is also a behavior rating in India. So similar to what she mentioned.
Of tax authority. No, I think it's been a wonderful session, and the board is showing time's up. So quickly to wrap up, although we would have loved the discussion to go on for another hour, but nevertheless to just, okay, one last liberty, I'll take one last liberty, Mani, which is one line, one thing that you would want in GST, next stage of GST to be, one thing. If you were given a wish that, okay, you can ask for one thing, Pratik, what would it be? And I'll take it round, including you, Mani. You have to give your answer to that.
I mean, I would say
one
line is tax administration geared up for the future, which is more tech-enabled. I think that's...
More tech ability, yeah. Okay. Sir?
In our country, the controls are going, but controllers are not going.
Okay.
So I would like the controllers also to go, and the lawyers community should be made less relevant.
Less relevant. Nagendra, sir?
I think I would say, build capacity in the tax administration to be more professional and more taxpayer friendly, in the sense that I think laws are implemented in true spirit and letter.
Wonderful, sir. Mani?
I would just suggest that we need to segregate some parts of the legislation for various businesses.
Yeah, okay.
So for instance, we need to have a separate section, a separate chapter for financial services. Because the existing laws which are made are largely keeping in mind a trader, dealer, wholesaler, manufacturer, which doesn't work for a bank, it doesn't work for insurance, it doesn't work for broking.
For digital services.
For digital services. And China has already done that. So we may need to replicate that and have some specific provisions covering various businesses.
Wonderful, wonderful. Kendra, what would be your one-line suggestion be for Indian GST?
I think that this... Keep it as simple as possible whilst trying to achieve.
It could be a simpler answer and the best answer. So thank you. We are just coming to the conclusion. I'll just sum up 10 points I said we'll go back with. So 10 points that I've summed up from this discussion and I've been writing. One, of course, increase the tax base. That's 50% must, 0.5 must go up to 0.7. Keep the tax rates and the law simple and the procedures very simple. Exclusion, the consensus is that bring gas and electricity slowly into GST. And don't think of dual levies right now, maybe time is not right, and then think of the other fuels. Real estate, selectively, yes, bring it into GST. Legally, again, simplified legally, has less number of rates to reduce litigation and put a time limit on resolution of disputes. What Rule 10 was there, 3 months, if not 3 months, at least 3 years. Then procedural mindset, the mindset, most important, I think that is a consensus. The mindset of the tax authorities has to change, the mindset of the taxpayer has to change. We have to bring in a lot of behavioralism. As in King Lear, they said, I want to experience the world with feelingness. So tax has to be administered with a lot of feelingness here. So that is another important thing. Treat large businesses differently. You don't have to give the same, one rule applies to all. ITC, as Pratik said, simplify, unnecessary restrictions must go. My input here is that we must have it HSN based so as to simplify. And then some part of centralization in compliances, have sectoral centralization, as Mani also said, have sectoral laws so that each sector can be addressed, the uniqueness of each sector can be addressed. And finally, last word to Kendra, Hann, just simplify. So our conclusion is just simplify, and that is the answer for GST 2.0. Mani, anything for you?
Yeah, so I just wanted to take the pulse of the audience in case anyone has any thoughts, because we have shared our thoughts, all of you have heard us. So if there is anything that anyone would like to share in terms of what is it that we need to do over the next few years of GST, the objective being to make GST in India a world-class piece of transaction tax.
One line.
So anyone in the audience wants to share any thoughts?
Yes,
Yes, can we have a mic over here?
Only one thing, please ensure to see that this law, the current GST law, is freed from the legacies of the state weight laws.
Very valid point. Completely agree with you. Anyone else has any thoughts? I think you need to send a mic in the middle to the lady.
Sir, I am from power sector. Now a tariff is coming with subsidy and without subsidy. Means full tariff and with subsidy. Why not? And whatever gap is there, they are showing as a subsidy borne by concerned government. Why not we make a provision of GST in this part also, so that this can be shown to the consumer also as well as government also. Okay. Like GST can be covered by the subsidy also, but people also know and government also know the same.
Okay, fine. Point taken.
Agree with you.
Thank you.
Can we just pass on the mic to the lady in the middle?
Yeah. Hello, sir. My point is the way the reforms have been done in the return filing on the GST portal, similarly, the reform should be done on the litigation management. I mean, pre-consultation notice, SCN, post-SCN, you know, all those things should also need a similar sort of reform the way we had seen in the GST return filing.
Yeah.
Excellent point. Excellent point. Completely agree with you. I don't think there can be any two views on that. I think you can just pass on the mic behind you. I think there's someone there.
Hello, sir. I'm Chandrani Banerjee from the Parliamentarian magazine. I have just one point which I'm sharing. I don't know how important it is, but it is like the personal experience. My sister has a small business, and due to Corona, there were some returns. She could not file, and then she went to file. But it was a huge 1 month running around where she could find out, you know, how to find this thing. Her GST was blocked. Her business was stopped. And it was a nightmare. So I don't know how this, at this level, you know, where you, a very simple, small businesses can also go and one single window clearance.
Simplify compliance.
Absolutely. Yeah. Simplify procedures and implement them with some empathy. Yeah, and I think, can we have a mic in the front?
One point from you.
I think Mr. VK Garg in the front row needs a mic here, please. We'll get your mic, sir.
Only one suggestion. Anybody who's working on GST policy in the government should spend 3 months in various corporates. You can choose and file returns for 3 months.
Fantastic. Thank you very much.
Thank you very much.
Thank you all. And we took extra time. Kendra, thank you for joining very much all the way from London. It's been a pleasure, and I really hope you also liked the discussion on the Indian GST and how to make it world class.
No, it's been a pleasure. Thank you for inviting me, and apologies for not being there in person.
Thank you very much.
Let's hope the visa issues get sorted out.
Thank you to all the panelists and both the anchors for keeping this session very interesting. Before we let them off the stage, I would like to request the TIOL team to kindly felicitate them. And now I request all the panelists to please pose for a group photograph together. So if you could put it on the table. Thank you. Thank you to all our esteemed guests, and a big thank you going out to Ms. Kendra Hann for joining us all the way from London, ma'am. Thank you so much for sharing your insights on the issue. Thank you. Moving on, ladies and gentlemen, it's time for me to invite onto the stage TIOL Awards Committee Coordinator, Mr. R. Sridhar, to propose a vote of thanks.
Please bear with me, we have a long list of people to thank. The 4 sessions for the day, Beyond ABC of Digital Economy, Are we running bit behind the clock on the new income tax code, Managing big data, Insights into tax compliance and big corporate decisions, and Next frontiers of GST. We thank all the panelists, the people who have come from in and around Delhi, people who have come from Mumbai to make this such a successful deliberation, the thought process and the leadership thought that came out of the 4 sessions. Thanks to all the panel members. We next thank the Platinum partners, Reliance, the Knowledge partner, Deloitte, the Digital partner, Fourth Dimension, Magazine partner, Parliamentarian, the teams of all officers on both sides of the Indian revenue. You would have seen one thought we had merged in this tax conference. We didn't distinguish between the direct and the indirect. There was one thought process in all, whether it was the digital side or whether it was the compliance side. So to that extent, we looked at both. And all retired IRS officers who are on the advisory board with regard to the TIOL awards and the Tax Congress, serving in various capacities, advising Shailendra and our team on improving the standards of the tax conference, Congress year by year. Honorary officials of both the Government of India who were patient enough to accept our invitations, those who could come, those who could not come, and the governments of the states who are very patient with us. The GSTN, we owe a special thanks to the entire team. And with regard to the team of TIOL, I would be really falling in my duty and failing if I don't thank the staff of the IT and the admin who have spent a lot of tireless days in getting this event up, handling the hotel, handling the administration, and praying to God that there is no another COVID also. So thank you, Team TIOL. And next, we thank the systems partners, Kendra Systems. I think a big hand of applause for these Kendra Systems because they are responsible for developing the new version of our IT website also of TIOL. We finally thank Taj Palace Hotel, the staff and the members of the security and the management, senior management, who really assisted us in carrying out this whole day without any blemish or any hiccup. Thank you so much. Have a good evening. The coffee is up for the evening. You will have further announcements. Thank you.